You know when we're live, and I'll just.
We're live. We could start anytime.
All right. What is up, Adriano? Welcome back to the channel, Mr. Passive Income Investing. Glad to have you here once again.
Hey, Brandon. Glad to be back, my friend.
How are things?
Great. Excited to be in Montreal. The plane ticket is booked. We'll finally meet in person in a few weeks, as well as a bunch of ETF companies and sponsors. It's going to be fun. It should be a great night. So I
Dude,
can't
the
wait for
turnout,
that.
the turnout for Montreal is like actually way more than expected. I think they're coming to see you, to be honest, and I think that goes to show how
They will
much of
see
a
me. They will see me. I'm
you
happy. I'm
got.
happy to hear that. Hopefully, we'll get the booking finalized soon, and it'll be a nice little intimate event. I think it'll be really cool. Who knows what'll happen? Or maybe like we were discussing, maybe this will be an annual occurrence. I think it's pretty cool. And good on Blossom for thinking of this and getting the sponsors and everything. It's really good.
I think so. I'm excited. That'll be less than a couple weeks away. So yeah,
Yeah.
no doubt, no doubt. But hey, I want to bring you back on the channel again because, dude, our last video we did was loved by my audience. There's a ton of people that had watched both of us, and particularly, the income investors were a million questions for you, and questions I don't know necessarily how to answer. I'm like, why not bring Adriano back on? Because I feel like there's a ton of, I don't know if changes is the right word, but like the landscape here in the covered call income space there's a lot going on. And
Yeah.
I wanted to just kind of hear, maybe to start things off, like, can you give a general overview of what you've been seeing these days, the past year? Yeah, what's going on
Man,
in
where
the
do I
income landscape?
begin? I mean, I thought 2022 was a crazy pivotal year for the income space in Canada or the covered call space. 2023, I mean, it's basically Christmas. I mean, all these ETF launches are coming out from, the top 5, 6 covered call ETF providers.
Yeah,
You have BMO, which just launched their all-in-one covered call ETF. So obviously, many people love BMO. They are still by far the biggest covered call manager. So they finally came out with an all-in-one.
mm,
You have Horizons that just launched like 6 new ETFs, 5 of which are leverage. Some of them are covered call with leverage. They've reduced their fees as well on some of them.
yeah,
A lot of you have other covered call managers that have been raising their dividends significantly on their financials covered call ETF. So honestly, what I think is happening is capitalism at its best, my friend. I mean, this is why I love capitalism, because when I think of capitalism, I think of competition. So all
hmm,
these ETF providers are kind of all competing with each other. And that is good for us, the retail investor, because we have a lot more options, lower fees. And yeah, I mean, there's a lot of new product launches. I mean,
dude, it
it's
spurs
really
there's
interesting to see all these companies competing, and how popular covered call income investing is getting, which it's not really a surprise. It's typically gets popular, I believe, when markets are kind of like in a holding pattern. Are they going up, or are they going down? I know the tech has gone up a lot. Canada, not so great because it's very financials and energy focused, materials focused as well. But yeah, a lot of options out there right now in the Canadian income landscape for sure.
no doubt. And I'm seeing that as well. And like, yeah, Horizon's one I was looking into. And in fact, I have a video coming out with them pretty soon, probably in the next week or two, because I was looking at the exact suite of their equity essentials. And like, geez, there's clearly such a demand for these products. And I genuinely believe, like you said, it's a major positive that you have these people. I mean, they're kind of in a bit of a battle, to be honest, to attract the money and this and that. And they're cutting fees, this or that. But we're here as the DIY investors, and it's like a open field of choices. I would almost argue it's like kind of becomes a bit confusing as to, well, which is the best one and which one should I be going for, because there's
Yeah,
a
a
ton of
lot of
great options.
choice. Yeah, for sure.
Do you find that, like, I think because obviously you're very in tune with the different choices and the nuances between them, but for a new investor who's looking to get some covered call exposure, it's almost like there's, what the heck do I choose now? There's so many options.
Yeah, it could be difficult to navigate through because let's be honest, it's the stocks are pretty much the same, right?
Yep.
What's really different between them is, and this is the key that I would focus on, and I would tell people that are confused, okay, which Canadian six banks covered call ETF do I go with? Which overall Canadian market, overall US market? Now it seems like everyone has their own. Some have leverage, some don't have leverage. Some have more aggressive covered calls, less aggressive covered calls, which are, you'll have a little bit more growth, less income, but a little bit more growth if the markets go up. So my honest opinion is, and my top advice is, really understand the two biggest factors when it comes to the covered call strategy. If you understand and master these two factors, which is the same for any covered call product, then you have a much easier time to make a decision, because you could analyze the product and look at these two factors and go with the fund manager or the product that best serves your need, whether it's a nice balance of growth and income, whether it's I want maximum income, whether it's like 75% income, but I don't want too aggressive, or maybe you want the high yield covered calls or the aggressive covered calls without the leverage. So the two major factors when it comes to covered calls is the moneyness and the portfolio coverage. So if you understand that, you'll master the covered call product. So I'm not sure. I think you know what I'm talking about here, but portfolio coverage is the easier one.
The term moneyness, maybe
moneyness is a bit the harder one. So portfolio coverage is very simple. It's on what percentage of the portfolio are they writing covered calls on. Absolutely. So some covered call ETF providers will have a set limit, will have a ceiling. For example, a very common one is 33%. Like Harvest, for example, or Evolve, for example, they will never write more on a third of the portfolio, which means by default, at the very least, 66% of the portfolio basically captures whatever the portfolio is doing, the growth or the downside, right? So, every provider has a different covered call percentage. Some can vary, some are set in stone. So like Harvest, for example, it's up to 33%. So they could be doing 25, 30, up to 33. So
they have the discretion.
The lower the percentage, obviously the more the less covered calls technically there is on the portfolio, which means it will capture more of the growth of the stocks if the stocks go up. But the lower the percentages, the lower yield you could possibly get. So that's the first factor. So some ETF providers, it's a dynamic, it's an active approach. Some it's set in stone, like a BMO is a perfect example where it's a systematic kind of a set in stone approach. It's always about 50% coverage. But that's just factor one. Second factor is the moneyness, and you have to consider both of them together. So BMO is at 50%. Sorry about the saws, by the way. There's construction.
I could barely. I think last time we were filming, there was someone mowing the lawn or doing something. So this is much better than last time.
Yeah, it's the lawn, and those are the two noises you hear. At least there's no traffic, buses or airplanes or things like that honking. But there is lawnmowers because grass just grows every day, and they have to do it every day. Pretty much, it's crazy.
There you go. But in terms of this moneyness term.
Moneyness,
what is this? Yeah, what is this?
So going back to the coverage, so I'll give you BMO as an example, BMO. So they do 50% coverage, which is higher than 33, but they always do out of the money covered call. So the moneyness is less aggressive. It's lower. Right. So when it comes to moneyness, it's basically how much out of the money are you writing these calls on? So if it's a stock is at 10 and you're writing the covered call option at 10, that's an at the money option. Your dad made a great video about this, talking about Hamilton, because Hamilton does at the money calls on their two ETFs. Yeah. It's a very aggressive covered call option because you're giving up all the upside. So if the stock goes to 1001, 1002, you don't capture that. But the flip side is you capture really, really big premium. Right? The more the closer. So at the money, big yield, big premiums, you give up all the upside within that 30 days or 60 days. Typically these cover calls are written with 30-day contracts, right? So higher premiums, but you're giving up all the upside. But then you have to consider the coverage. So if they're doing 50% coverage at the money, even if the calls are being exercised, you still capture 50% because they're only doing 50% coverage. So that's basically it when it comes to moneyness. Out of the money means you're writing the call at 10.50 if we're talking about $10 stock, 10.50, $11. So $11 would be like 10% out of the money, which is a very, very non-aggressive covered call. Typically they do, 5 or 6% out of the money, but the more out of the money you go, the less chance your call option is going to be exercised, so your premium is much smaller. So BMO, for example, does 50% coverage, but they're always out of the money. So you hear 50% and you're like, well, 50% is not going to capture any upside. No, that's wrong, because it's 50%, but they're out of the money, right? Whether
Gotcha.
if it's 50% at the money,
Mm-hmm.
then literally half is not going to capture any upside, but you're going to get big premium. So the main thing an income investor needs to master, in my opinion, is understanding those two factors and figuring out what is the best fit for you. And because every
Great point.
provider has kind of a different covered call strategy, and it's really an art, the covered call, writing these covered calls. And typically the same manager will do the same strategy for all their products.
Mm.
So that's really the two main things you need to look out for or analyze, in my opinion, if you're trying to navigate.
Yeah. No, thanks for sharing. That's great info for my audience. Probably a lot of new stuff that they're hearing there, and even myself. The markets have been a bit, what have they been done? Essentially, I know the Canadian market's trading sideways for the most part. It's
Yeah.
basically flat year to date. Tech stocks done well in the States. What type of markets would you say are favorable for this type of strategy? Do you even factor that in, depending on if markets are going up or down, bullish, bearish, or
Well,
this is just kind of a thing that you are, hey, I'm going to be doing this no matter what's going on. Is there a way to play that, or what's your approach there?
second thing you said, for me personally, I'm playing this no matter what, because
Right.
even in rising markets, you're still gonna get that yield. You're capping your upside for sure.
Yeah.
Where the cover call strategy really shines is the best is the range bound sideways markets.
Those
That's
are
when the
best
cover
for you.
call, yeah. So I know some people for sure, when, this is something I never do. I never try to predict the market, time the market, but people who, if they feel, okay, I think the market's not going to be very good or go up that much in the next year or 2 years or 3 years, some of them will get out of their, their index funds or their classic growth, and
They're
they'll go
long
into
stocks,
those
yeah.
covered call ETFs temporarily,
Yeah.
because when the market is flat, the portfolio is doing the same as the other stock portfolio, because it's all the same stock, right? So if you have the big six Canadian banks without the covered calls, and you have the big six Canadian banks with covered calls, it's still the same stocks. But the
Mm-hmm.
guy without the covered calls is not really getting much growth. The guy with the covered calls is not getting much growth either, but there's that
Because
extra
you're the
yield, that
premiums.
extra covered call income.
Exactly.
So they perform best during a flat or slightly bullish market. Again, that
Okay.
depends on the covered call strategy. If it's out of the money and it's slightly bullish, which means it's going up very slowly, there's a big
Yeah.
chance those out of the money calls won't be exercised. So that's like good balance.
Mm-hmm.
But it's
And then I
really
guess another,
yeah. Sorry,
so I
go
was gonna
ahead.
say another thing to consider there is then when you have these leveraged ETFs where they have a modest amount of leverage applied. I mean, then if the markets are dropping, that's obviously unfavorable, but that is another thing to consider as well, right? And again,
Yeah,
like what I think is cool, I was looking at the Horizons ETFs as I was mentioning the equity. I was basically really like diving into and learning about the equity essential suites, and I mean, I like how they kind of lay it out with the different, you kind of have this matrix. There's a chart that I'm visualizing in my head where it shows you kind of have the different options, and you can go for strictly covered calls. You can go for, let's say it's the Canadian banks, for example. You can do leveraged, you can do a combination of both. And it brings me back to what you said earlier about how when you really understand what each product is there for and the strategies that each fund provider utilizes, you can finesse and pick that strategy that makes the most sense for you. But that just kind of
exactly.
jogged my memory, and like it does take quite a bit of education, to be completely honest. And that's where I mean I always do, but encourage everyone to go subscribe to your channel if they are my viewers and not watching you guys. I mean, anytime I have a passive income question, you're the guy I come running to, Adrian. You already know that,
Yeah, yeah. So
and
a
it's
guy
exactly why
is just
there's a lot
hammering
to
the wall
consider.
next to me. I apologize. But yeah, talking about leverage. So leverage, if you add 25% leverage to anything, you're just going to get 25% more volatility. So the
Exactly.
way I like to
Both
explain it
ways,
is
yeah.
short term. If you're investing short term, or you're thinking short term, leverage could either be your best friend or your worst enemy. But long term, if you're putting it on something that generally goes up over time, like the overall
Right.
Canadian market, the six banks, the
Right.
overall US market, typically leverage is going to be a good friend over time. So as long as you're thinking long term, you should be okay with leverage. Whether you're an income investor or a growth investor, because Horizons now has two leveraged non-covered call ETFs, six banks
Yeah,
with
saw
leverage, and
those.
they also have HXT with leverage, which is
TSX.
the
Yeah.
TSX 60. Yeah, so I know exactly, they did a really good job with their website to say, look, here are five options for Canadian
Yeah.
banks. Which one do you
Which
want the
which
most?
is which is kind of what you need because like I said, I mean, for someone who is just trying to get into this space, it is extremely overwhelming with all of the different options. And yeah, I mean, we do our part to try and educate about the different products and give people these options, but it is tricky. But no, I totally agree with you there. And on that talk of leverage, I mean, you think people leverage up on their homes, and homes, if you buy in a good market, those go up over time. It's an asset where, I mean, you're majority leverage,
Exactly. If
80%.
you have a mortgage, you're
Um,
taking leverage, right? So a lot of
right,
people have this fear of leverage. This is leverage that it's not you technically borrowing the money, it's the fund manager. They get money a lot cheaper than me and you can. It's
right,
only 25%. It's like getting a $250,000 mortgage on a $1 million home. The bank will
right.
close its eyes and give you that loan like that. It's very
Mm,
modest leverage. And what's cool about putting it on, whether it's a growth product or an income product, you get 25% more yield while you're waiting.
mm.
If the markets take a sharp downturn, you're going to go down plus 25%. So as long as you're a long-term investor, I think leverage is your friend. But when it comes to the
Yeah.
covered call stuff, I mean, getting 25% more yield, which is very easy to
Right.
get 8, 9, 10% yield,
Yeah.
add 25% of that, you're in a 12, 13, 14. There's a lot of ETFs out there that are with, at 15% yield. People
Saw
think
that.
that's not sustainable. First thing they think of. I always say, well, that's because you don't understand covered calls in the product. If you actually start doing the math, okay,
Mm.
I'm getting, a big six Canadian banks ETF, just the average dividend yield's about 5%. Add
Right.
25% leverage to that, you're at 6.5%. So 6.5% of that 15% yield is just the dividends. Then there's the covered call income at 25% leverage as well. And after you do the math, you're like, okay, it's pretty easy to get to 15% with stocks that already have high dividend yields, like the Canadian banks, like the energy sector, things
Mm.
like that. So these yields are very, very nice. They're very sustainable. But like I said, the higher the yield is going to be, typically the covered call strategy is a bit more aggressive, which means you're probably limiting your potential growth when the markets go up more. So
Trade
what do
off.
you want
Yeah.
more? Are you 100% yield guy, kind of like
Yeah.
me? Are you a
Yeah.
50-50 person? And you could even do a 50-50 by getting the leverage covered call ETF and the leverage growth ETF and holding them in sync. So Horizon has done a great job, for example, in coming out with these great products where you could mix and match, take a hybrid approach, right? So yeah.
Absolutely. Well, no, thanks for sharing that. And that's great thoughts there, Adrian. Um, why don't we transition to something else? You mentioned just there. So your strategy is like focused on yield, like 100% yield. That's the lifestyle you've been living. That's the lifestyle you've lived for, I guess, the past number of years. How has that been going? I always find it valuable to hear someone who's actually living this passive income life. Is that what you call it? Passive income, fire, like PII? What's the term you would use for your lifestyle? And how has that been? Like, how have things been?
Yeah,
Obviously, you made the big move. Like, yeah, bring us up
it's
to
been
speed.
over it's been over 3.5 years now, and it's been great. And I know for sure this is the right strategy for me. Some people, it's not for them. They don't understand it. It's quite hard to grasp if you're not living it. But it's the primary objective when I first started coming up with this strategy or thinking about this style of investing was really to become financially independent, free, replace my paycheck. I want enough cash
Mhm.
flow so that all my expenses are paid. That means you're financially independent and you're financially
Yeah.
free, because if you're not financially free or financially independent, you're financially slave or
Yeah.
financially dependent. That's just the sad reality. You have to go to work. So we wanted, first things first, let's replace our salary, take a breather, let's focus on enjoying life a bit more, quality of life. And that's how the channel got started. If we weren't financially independent, my wife didn't quit her job, the channel would have never got started. So
Mm.
financial independence is really the main objective. It's
Yeah.
a income oriented style. Your focus is really maximizing your passive income, not
Mhm.
necessarily maximizing your net worth. It's a little
And
bit different.
I think that's the difference. Like when you do hear pushback and people that are maybe not as educated, it's just to me, it's like it's just a mix of it's like almost like a miscommunication, if you will. And like what you said back there is so important. You said this is the best strategy that's working for you. And I mean, a lot of people don't have this care or need for passive income right now. And maybe they're trying to amplify that net worth. Like, let's assume they're trying to snowball that net worth
Yeah.
so that when they do reach age 65 and they quit their, traditional job, they want as big of a number in the account. And if that's the case, I mean, I would argue, and again, I've pushed back on a lot of your, we have two different strategies. We are different investors, you and I. And, like in my opinion, for a young person, like that covered call strategy, like if you're trying to build that net worth up high, I mean, maybe those don't entirely align, but it's two different purposes, right? Like it's two
It,
completely different objectives. And I think that's where it's like there's a million analogies one could think about, but it's like someone goes to you're looking in the wrong place. You're going to the wrong store for the wrong product type of
yeah.
thing.
We're, we're,
But for the right store and the right product, it's a perfect thing, right?
yeah. Well, we're investing in the same things. We're just getting our return in a different way. That's the
Right.
way I look
That's
at
one
it.
way.
So the
Yeah.
argument where, this is not a good strategy for young people, I get this question all the time. Typically, the
Mhm.
viewers of my channel are typically people who are, in their
Older.
career, they're a bit older or they're retired, they're thinking of
Well,
retiring early, they're
yeah.
retired already. But believe it or not, I do have a lot of 20-year-olds that are all into the PII because, tell me if you agree with this. I don't think investing is all about the total returns all the time. I think that there's a psychology effect to it. And what I've noticed from hearing about these young people that are in the group and that are all in PII, that they're just starting their career, they're in their 20s, they're going all in PII, is that PII gives them a sense of, I always know what to do with my money now. Because with PII, your money always makes more money for you.
Yeah.
So it's a system that motivates them because they see that cash flow coming in,
Yeah.
and it motivates them to be disciplined and not be discouraged when, let's say, the markets take a big tumble. Whereas sometimes when that happens, young kids get, younger investors, inexperienced investors get very discouraged.
Dejected.
Because if
Exactly.
you look at all the funds that I have personally,
Mhm.
most of them, besides the crypto
Mhm.
ones, which is like 10%, 9%
Mhm.
now,
Mhm.
they're all the big cap blue chip dividend stocks or literally indexes, TSX 60, S&P 500, NASDAQ with covered calls. It's not like it's very higher risk. I actually believe it's low risk because when you add covered calls to something, you actually lower your volatility. So even as a young investor, let's say you technically don't need that income. I
Mhm.
always find that phrase funny because, well, if you don't need income, why are you going to work? But anyway, I get the argument. You're in your
Fair.
career. I talk to a lot of dentists, lawyers, doctors that they're in the middle of their career. They just want to put their money someplace. They love the cash flow style. A lot of real estate investors also like this style because real estate investors are all about that cash flow. So
Mhm.
there's a really a psychological benefit to PII where no matter what, you're getting paid every month typically. So it gives you that calmness and you never have an excuse now. You always know where to put your money to make more money. So it gives you a lot of really good discipline for younger investors because, I wish I knew this when I was 25 or 2022 when I got, I didn't.
Yeah.
So
I genuinely think like that entire segment you just said was actually extremely powerful, and And I do agree with you, by the way. Like, I agree with what you said there about so many people get fixated on total return. You have these people crunching their numbers and say, what's going to get me the total return? There are so many other factors, like you mentioned, you just spun off a bunch of them: lifestyle, peace of mind,
Very powerful,
discipline,
right? Yeah.
habits. I genuinely think that was you know, maybe people are watching overlook that. That was very, very, very powerful. And I do, just FYI, you know, if I didn't invest the way that I did, this I don't know if I would say 100% kind of passive income strategy is what I do, but I would certainly lean more your way than not because of those other tangible benefits that you talked about. Everything. I think people that do follow this passive income movement, and even from a young age, let's say at their 20s, they have a different mindset, a different outlook on money than other people. They're the ones that are they tend to be frugal. I noticed they tend to be frugal. The ones that are doing it are the frugal ones, and that's like the right thing to do.
Yeah.
It's not necessarily my personality type, but if I could lean one way, I'm like, I wish I was like this. It's funny. One of my favorite YouTubers in the States, PPC Ian. I don't know if you follow YouTube in the States too much, but he's a dividend investor. Dividends, right? Not necessarily covered
Dividend
calls it
growth. Yeah.
dividend growth, like entirely dividends though, passive income. And it's the same idea, but just, you know, you look at the yields and they're just lower. They're lower than this. And as I've, you know, I mean, Ian and I are chatting all the time. He's did literally this morning, he did a presentation at the academy. He does these presentations for our students once a month or so. So a great relationship with Ian. And over the past year and a bit, he's been looking more and more into these higher yield solutions. And you take someone who, for however many years, like decades, has been in this dividend game, and now he's starting to look at these products because, hey, I guess what he's seeing out there, he's finding attractive. He is also maybe getting older and learning about new things, but it's really telling when you have people like yourself and him who are know and love this space, and it's like kind of leaning one way. So
Yeah.
yeah, I appreciate all the thoughts, bro. I'd echo a ton of them. Again, we have different strategies, but I freaking love it
Yeah,
personally.
dividend growth is very, very common, very
Yeah.
popular. I
And
find
that's what I would say. If I did have to say, if I classify myself, I'm a hybrid investor. I own a bunch of growth stocks that don't even pay dividends. I
Mhm.
own a few higher dividend paying stocks that pay like in that 4 or 5% range. But if I own a dividend stock, it's very likely a dividend growth stock. But go on.
Yeah.
I didn't. What were you gonna say? Is you were gonna
Yeah,
bash
that's
it?
how I pretty much started. You know, when I started, I didn't know
Yeah.
about these funds, or they were fairly new, not as known, and the leverage ones weren't out yet. Or, you know,
Yeah.
I had Bell, I had CIBC, I had Scotiabank, I had, you
Yeah.
know,
The
a bunch of
classic ones. Yeah.
REITs,
Yeah.
and I was making 5, 6% yield. And I'm like, I realized that, you know what, when the stock market, whether it was going up or down or sideways, in my head, I'm like, you know what, all that really matters, all I really want is that income. So it was just kind of a gradual for me. How could I get access to these great safe stocks, but get 10% yield, get 8, 9, 10% yield? And that's when I started discovering covered call ETFs,
Mm,
covered call strategy, because it's the same stocks. You're giving up some growth for more money now. So if
yeah.
that's your priority, I think it's
And
great. And the cool thing about the income strategy, you could turn it into a growth strategy if you just put everything on drip. So a lot
right.
of people I talk to that have a high net worth, they like this strategy. They're doctors, they're surgeons, or they're cops and
Lawyers. Yeah.
lawyers. They don't need the income now,
Yeah.
but they like the investing strategy. It makes sense for them. They have everything on drip.
They just
So they
snowball it
go to
back
work every
in.
day,
Yeah.
and every month they get more units, and every month they get more yield,
You
and
know,
more passive income. So you have that option as well as an income investor.
I heard this argument, which was new to me from Ian about a number of months back. And the argument for another argument for passive income investing was, how much value do you put on a dollar in your hands today? And whether you're young, whether you're old, I mean, basically the argument went like, the next 10 years, what's going to happen from now to 10 years? Probably things are going to be great. Markets are going to continue going up. History has shown us this. Economy is going to keep functioning. America will still be standing and it won't implode, whatever the case is. But there is an argument
Hopefully,
to be made. I mean, yeah, well, that's debatable. We'll see at this rate. Canada too. Unfortunately, we'll see. We'll see. Anywho, there's an argument to be said that, why not just take that income today? And why not have that where you can go spend it on utilities or go buy food or whatever it is, if, for example, you're buying a dividend growth stock such as myself, and I say, well, over the next decade, I anticipate to grow at 12% this, there's still shoes to fill. There's still uncertainty to that, where
Exactly.
what happens, again, we do the best we can as investors to say we're going to pick the best ones with the best track records, but there's nothing guaranteed about the
Yeah.
next 10 years. Whereas with this passive income strategy, you take a dollar in your hand today, you get that distribution or paycheck. That is your money to do what you please. And I guess there's some people value that more than others. But I thought that was a really interesting argument. A dollar today
Yeah, it
versus
is. This is
10
where
tomorrow.
that psychological again comes in. A lot of psychological benefits to this strategy. It's coming in the
Right.
next month. You're not the way I think about it. You're more of a pessimistic investor. I feel like I'm a pessimistic investor. I don't.
That's a good way. That's one way to say it. Yeah.
I mean, if you look at the last 10 years of either the S&P 500, the Nasdaq, compared to the last 50 years, that space, it's incredible. It's like a rocket ship.
It
Is that going to
is.
happen in the next 10 years, or is it going to be a little bit more flat, a little bit more gradual? And if you're a dividend growth investor, will these companies keep raising their dividends for the next 10 years? Because they get from 5% yield to 10% yield without covered calls or leverage or anything. It could take a decade or two to get to that. And it's not
Yeah.
guaranteed, bank of,
Yeah.
at
Yeah.
one point they told the big banks they can't raise their dividends. So we just don't know what could happen. So I feel like this strategy is more for a pessimistic investor that wants to live life to the fullest now rather than later. And what's surprising is, that the total return argument kind of, these funds, especially the leveraged ones, so that 25% leverage really helps to boost up the total returns a bit. And another mistake people do, they just look at stock charts, stock price return. So if you're getting 15% yield, you're not going to expect a rising stock price. If the stock price stays at nothing for the whole year, you've made a 15% realized, not unrealized, realized return that year. So
Right.
that's another thing people need to stop looking. If anything gives income, stop looking at the stock chart. Look at the total returns. If you want to look at Tesla, Amazon, Google, things that don't give a dividend, break your head all you want. Look at the stock chart. That's all there is. You gotta buy low and sell high. That's the only way.
Good
So yeah,
point.
it's definitely
Really good point.
designed for defensive, pessimistic investors. I feel this is just my opinion, of course.
Yeah. Yeah.
That want
That's a
peace of
great
mind. They
point.
want to sleep well. They want to replace their paycheck. They don't want to worry about how much do I need to retire. If
Hmm.
your life is costing you 4 grand a month and you're making 4 grand a month passively, you're financially independent. Doesn't mean
You
you're going to
win.
sit on the sofa and do nothing.
Yeah.
It just means that you could start your life, your real life 2.0, where you're financially free. So, yeah,
It's a very attractive thing to think about, right? That's a very, for a lot of people, like, I mean, that is the goal, right? And there's a very clear method of getting there.
for us it works,
Um,
and you could even be a
yeah.
hybrid investor. I know people who are like 80% in PII or
Yeah.
90%, and but they'll put 10 or 15% in a VFV in an S&P 500,
Hmm.
right? So you could also be a hybrid investor. It's a pretty good idea too.
Yeah.
So this is the thing. Do-it-yourself investing is really about managing your own money, figuring out what's best for you. Forget about what everyone else is doing. Get the ideas from everyone, but then figure out what's best for you would be like my number one piece of advice for newer investors out there, because you can get bombarded with a lot of
Love that.
information.
Hmm.
So
No doubt. Well, I don't know how you are on time, man. I can keep going, but I did have
I could keep
I
going all day. I'm
well, then
retired,
let's do
so
it. Let's do it because this one question comes to mind.
yeah.
Maybe inform me a little bit about these like Tesla. There's like there's the Tesla stock, and then you have these Tesla products by Purpose, I
Yeah,
believe it is.
this is kind
That
of a
basically like what
newer
is this?
product.
I'm
Awesome.
seeing I'm seeing it everywhere, and essentially, like, am I correct to say I saw one that had like a 50% yield? I might be reading that wrong,
No,
but a 50% yield, and it
yeah,
somehow was the underlying was Tesla, and I'm like, that doesn't sound right. But maybe you can kind of educate. Is it YTSL or T? What are the ones I'm
yeah.
thinking
So
about
in
here?
Canada, you have, so basically this is a product where it's an ETF that holds one stock,
Okay.
and they write covered calls on it, on that one stock. And the thing that people need to understand with covered call income is that the more volatile a stock is, the bigger the premiums are. So the premiums on Tesla stock are going to be way higher than TD Bank or Bell Canada, right?
Right.
And in the US, the options market is much bigger. So what you're talking about, those 50% yields, those are the YieldMax ones. That's on the US market. But in the
Okay.
Canadian market, my good friends at Purpose ETFs, which I just did another Q&A with their really cool cover call fund manager, Nick Murch, where we talk about the upcoming tech earnings, which I'm sure you'd be interested in, right?
Mm-hmm.
So what they've done is they created 5 ETFs that only hold one stock. So
Right.
they have a Berkshire, Amazon, Google, Apple, and Tesla. So the Tesla one is the most popular one by far.
Right.
And what they do is they add 25% leverage.
Okay.
So it's Tesla stock with 1.25 exposure to Tesla, but they'll
Yep.
do covered calls on 50% of that exposure.
Okay.
So they have an active covered call strategy. So you can't really say the moneyness is, it could be out of the money, could be closer to the money. But needless to say, you have, 125% exposure to Tesla stock, 50% of that. So, 125 divided by 2, 62 and a half, I believe. It
Okay.
has covered calls on it. Because the premiums are so big on Tesla, they're able to get, right now, I think the ETF is giving a 12% yield. I had actually bought it when it was at $14. My yield's 26% on it. So
Jeez.
it's very interesting. So it's basically a really cool way to get access to stocks that you really like, but you are willing to forfeit a little bit of a share price appreciation, which is not much because of that leverage, that 25% leverage for monthly income. So Tesla,
Hmm.
you'll right now, if you buy that, I believe it's YTSL, the stock symbol. Yeah,
That's the one I think I'm
YTSL.
thinking of. They're all
They have an
yeah.
Amazon, a Google one. Those are a bit, the
Yep.
yields are lower because those stocks volatility is lower. Burke and Apple are lower because they're even more boring stocks, right?
Mm-hmm.
So you could get a monthly distribution, which is taxed 100% like capital gain because Tesla does not give a dividend. So all the income that the fund is giving out is capital gains income because call premiums or
Yeah.
capital gains. So it's a really cool way to, if you want to invest in Tesla, you're scared that it's at the height. You don't want to deal with when, if I buy it now, when do I sell it? Buy low, sell high. You're always going to be looking at it every day. You're going to be looking at the
Mm-hmm.
news. This is just a
Mm-hmm.
more buy and hold passive way where you get paid. No matter what happens with Tesla, the fund will go up and down with Tesla stock, but at least
Mm-hmm.
you'll get that consistent monthly income, which is very high because the
Interesting.
volatility on these stocks are typically high.
Interesting. Yeah,
Yeah.
no doubt. I mean that's why it came on my radar. It was on Blossom. I think it was one of the most talked about stocks in the week, and it was up, geez, like 50% when Tesla had a crazy pop the past month or whatever it was. And I was like, Jesus Christ! I mean, like you said, you still do have some exposure to the underlying, and it had done well, and you got the income. So maybe a fun solution for those to,
Yeah.
because yeah, there's probably a lot of income investors who say, well, if this stock doesn't pay a dividend, so I'm not going to buy it or whatever. And I guess that the
This is a
concept of
great
it.
way to own. If you like
Interesting.
dividends, you want some income, you don't want to get the
Interesting.
Tesla because of that. This is a way to get access to your favorite companies. And what's very interesting, Brandon,
That's a really innovative concept they came up with there. Hey, that's
yeah,
great.
and I already know the first thing people are going to say, well, these are going to underperform just getting Tesla by itself because they have a management fee, of course. So when
Mm-hmm.
you buy Tesla, there's no management fee. When you buy this, the management fee is actually pretty low by purpose. It's only 40 basis points. With
Oh,
the
it's not that
MER,
low. Yeah,
probably a little bit higher.
yeah.
But what's interesting is, and this applies for any cover call strategy. If the underlying shoots to the moon, the cover call strategy is gonna underperform. But that
Mm-hmm.
also depends on the moneyness and how good is the cover call manager. So the Tesla one has underperformed Tesla stock, but their Amazon and Google one, and I think Burke is right there, is right on par. Amazon, they have a couple that have outperformed.
Mm,
So you would have been better off with the Amazon, with the Purpose Amazon yield share, Purpose Google yield share on
yeah,
drip rather
yeah.
than the underlying, even though Google and Amazon have been on a rocket ship. So this is where my point I was saying earlier, you're not going to give up so much total return. And if Amazon starts flattening out, right? If these are going to outperform big time. If Google
Right.
flattens out, you're going to do much better than owning the Google stock with these, because you're getting that consistent
No doubt.
monthly income.
No
Those
doubt.
covered calls are not going to get exercised, so it's all
Hmm.
premiums, right? That you're getting. So it's a cool way to own stocks that you like in an income form. On the US side, there's a company called YieldMax,
Mm,
and they have four right now. And what they do is kind of similar, but it's 100% coverage.
mm,
So if Tesla one could do 12, 15% yield, think of like doubling, tripling that.
mm.
And they have their cover call strategy is a bit more aggressive. So the Tesla one is like 60% yield right now. But every month you could expect varying distributions based on volatility. So they have one on Tesla, they have one on Nvidia,
That's what
they
I
have
saw as
one on
well. Yeah.
Kathy Wood's ARK ETF. They have
Mm.
one on Apple, but one's coming out on Google, Amazon, Netflix, Meta, Coinbase. I mean, it's
Holy
exciting to
smokes.
see getting all these access to volatile, crazy stocks that you're scared to own without any income or whatever in an income form. So it's this is the
Space is
newest
really
style
blowing
product.
up.
Pretty
It
cool.
brings us
Yeah.
back. It brings us back to how we started this whole conversation off with all these new products coming out. We talked about the ones in the Canadian space, but like, holy,
The
what a
US
big
market too. I'm
influx from.
yeah.
Yeah,
Yeah.
interesting, man. Well, hey, maybe in wrapping up here, like,
Yeah.
I know you have some new stuff going on your channel, and I need to learn about it as well. Like, what is there a membership? Like, fill my audience in because yeah, if you guys aren't already, go check out Adrian's channel. Like I said, I'll link it down below. You guys probably already following him, but what's the new news over there?
I appreciate that. And
Yeah.
yeah, I've been thinking about it for a while. And, I'm always careful when I charge people money. I want to try to give the most value for the lowest dollar. So we recently launched YouTube channel memberships. I was thinking about it for a while.
Hmm.
And I think, yeah, it's only $3 Canadian because, when I look at my page here, it's all in US. So I think it's only like a
Hmm.
buck 50 US. Anyway, so I have two tiers, $3 a month. There's a
Yeah.
higher tier, $5 a month. That's my highest tier. So you become a
Jeez,
PII
peanuts
Inner
still. Yeah.
Circle member.
Yeah.
You join the channel membership, and you're gonna get exclusive content. My goal is to do at least one private members only live stream where people could submit questions in advance, ask
Nice.
questions live, at least every 2 months, and then the other month maybe an exclusive video, like some family members portfolio unveils, more private stuff. The first
Yeah.
exclusive
Personal
video
private.
is my whole net worth unveiled, all income sources, including how much YouTube pays me. So I wanted to start with a bang. I know people are
Oh,
curious.
I want to know
So
that too.
yeah, it's a lot lower than you think, but as you probably know. But
But hey, that's a ridiculously low price. Eh? Like three bucks. Can
yeah,
you
and
can
that's
you
just the
set
tip of the
on
iceberg.
can you set the prices and you've set them at 3 and 5
You
bucks?
you
Like
can
that's
set it. You can set them. So yeah, you could do $3. You could do $5. You could do $10. You could do different tiers. You could do whatever you want, which is pretty
right.
cool.
Huh.
And so you get exclusive content at least one a month. But I also have other perks. So I have my weekly opportunity report. I think this is one of the best perks. So
Hmm.
on my channel, I've been doing a monthly series called High Yield Picks of the Month. I just did episode 40. I can't believe it. Where I
Holy.
kind of, like we discussed, I kind of give an overview of the income landscape on both the Canadian market, US market. If there's any news on any funds, dividend increases, any new funds, what sectors or what funds I feel are undervalued. Very popular video. It always gets more than 10K views a month. So
Hmm.
this weekly opportunity report, which I release every Friday, is kind of like a quick condensed version. So you don't have to wait a whole month for that. So if you're,
Right.
if you're buying consistently dollar cost averaging like me, you always kind of want to know what has the
What's
best
yeah,
value. So this is my opinion on
absolutely.
what it is. I do the homework for you.
Oh,
So that's
bro.
another pick. What do you think about that? You think that's pretty cool, right? I mean, that's my
Bro.
favorite perk, to be
I
honest.
mean, in my opinion, this is my opinion. Like I was about to swear. It's a no-brainer, even without the perks. It's a three. It's almost like supporting. I mean, I know how hard you work in terms of getting all this content done and basically getting your message out there to help people live a lifestyle like you. $3 is like a donation, anyways, man. Like just to support and to show,
Yeah,
and then to
I
have
want to
that
make
the
it as low
exclusive
as
videos.
possible. Yeah,
That's
three.
what I'm saying. It's to me that's like ridiculous. Like I will subscribe to it as soon as I'm done this video because yeah, I haven't joined the channel membership, but it'll be done after this video. Just a as a support, and then to have that perk, especially for someone who's in the space. I mean that's the information that people want to know. Hence why those videos get the views, right? It's
Yeah.
funny
Well,
whenever
thanks, man. I
whenever
appreciate that.
yeah. No, I think
So,
that's a super fun idea, and I want to see that net worth video too. That's what I'll be waiting for.
yeah, people want to see that. Yeah, for sure. And
Cool.
the other popular video I have, this is even more popular, my portfolio unveil. So
Yes.
I'm all about full transparency and honesty. I try to show everything. I have
Yeah.
no taboos, like, with money. I grew up in a very, family more conservative. They don't, where people don't talk about money, but I think that's a detriment. I think everyone should, it's not to show off, it's just to encourage and give
Of
some
course.
ideas. So I unveil my portfolio every month, but I now, if you're a member, every time I buy something or sell something, I mostly only buy. The
Yeah.
day of, I put an alert to say what I
Mm,
bought and why. So instead of
damn,
waiting a
that's
whole month to see
yeah.
what I bought, you could actually see it that day of. So that's another perk as well that I've added. Call it like
Wow.
trade alerts or something like that. So
Holy smoke, that's a lot. That's a ton that you've packed in there for freaking. And there's what's the difference between the $3 and $5 tier? Does
yeah,
everyone? So do you unlock certain things at certain
yeah,
tiers?
the $5 tier, you have two extra benefits. One is you have, I told you every 2 months there's a live stream. You could submit questions. If you have
Yeah.
that other level, you get the top priority. You're pretty much gonna get your question answered when you
Yeah.
submit a question. But
Yeah.
another thing is a big discount off my one-on-one coaching session, 30%
Oh,
off.
cool. Oh,
I
cool.
decided to do this because I've been noticing that a couple of people who are a bit newer, not as confident, but more because they're busy, they have a career. Once
Yeah.
a year, they book me. They book a session with me just to go over their portfolio to see if
A
there's any
check in,
a
recap. Like,
check in.
yeah, yeah,
And I
smart.
feel like, for those people, might as well give them a big discount. So if you get one session a year, you kind of
Yeah,
already with the discount paid off. So that's the $5 one.
that's
I
too cool.
cannot charge people more than $5 a month. I just can't
Yeah.
do it. I feel bad doing it. So it's $3, $5. That's Canadian. And that's basically it. So it's been going really well so far, almost at 300 members.
Oh,
So
congrats.
we're building a nice little inner circle community. But I mean, yeah, it's very exciting stuff. I like hearing the positive feedback, the comments, and you really helped me. And I've done the same thing. This is a good idea. I make
Yeah,
this much a month now thanks to you. I'm not worried anymore. So it's about helping people. It's not really about like just making astronomical amounts of money.
I
But
feel
as you
you.
know, YouTube very
Yeah.
much underpays us. So this is a little way to, provide more support for me for the channel, which, I do full time now. So
That's epic, man. Well, hey, hopefully I can send over a bunch of subscribers over to you there because bro, that's a literal no-brainer. Like that to me is a no-brainer. And that's it. I didn't know everything that was included, but that is an exciting little thing you have there, man.
just
I'm
launched
glad
it
it's
like
starting
a
off.
month and a half ago, man. It's very recent.
Okay,
I've been
that's why
planning
I
it for a
missed it,
while,
bro. Yeah.
but yeah, thanks, man.
Oh,
I appreciate that.
great.
So Blossom
Oh,
event, Montreal, man. We're gonna see each other.
we're gonna finally meet, man. We've been
Yeah.
talking for what is it feels at least a couple years. And yeah, I'm actually probably meeting a couple people for the first time because I'm not over, east too often, but we're both flying into Montreal in theory because
Yeah.
that's when I heard you were coming back, I was like, that's just seals the
Well, I
deal.
booked my ticket because of the event. All else, I'm staying in Panama. I mean, there's floods there. There was a tornado or something.
I just saw
Like
that.
they say
Yeah.
in Quebec, rien faire là-dedans. I don't want anything to do with that. So,
Yeah.
but apparently everything's fine now. We'll go back, visit friends and family, check out, go to some nice restaurants that we miss maybe. And it'll be cool to meet all these fund managers and meet you and Max at
Yeah.
Blossom. It'll be cool. It'll be fun for sure.
It will be so cool. And hey, I know a lot of your audience has already got tickets, and there still is tickets available, and it's probably gonna sell out pretty darn quick. I think we had allocated 100 tickets, and literally what I just checked here is we're at about 80, 90. So we still got 2 or 3, no, less than 3 weeks to go. It's August 3rd for those who are from the Montreal area and want to come. Venue is going to be announced quite soon. We're just having a little hiccup there, but it'll get planned. And yeah, I'm sure there will be links down below this video to everything we talked about. Obviously, not every fund because we talked about a million of them. I'm not going to go dig up all the funds. You can
Yeah.
go Google that. But to your channel, Adrian, if I get a link to that membership group, because yeah, I hope I can send a ton of guys to you. I'll be subscribing right after this.
I appreciate it, man. You
That
go
is
on my channel,
it's a
it's
great
right
value,
there.
bro. That
Join button
literally
is right
sounds
there.
like a it sounds like a great freaking value, in all honesty. It's like funny, like, you're talking about like the way passive income people think. It's like, oh, if I make this much in dividends, it covers my utility bill or covers this. It's like, it's $5 a month, one of your dividends, one of your
Three
distributions,
dollars for the basic one.
three
Yeah, I
dollars a
want to
month.
make it as cheap as possible. I rather, I'm trying to give more value to people, but yeah, I mean, to each their own. I mean,
True.
if you
That's
want to join, you join, and that's fine. But so far, good. People love the weekly opportunity report.
yeah.
Um,
Yeah,
so
that's
yeah,
what people want to know, right? Is where the opportunities are, right?
yeah,
Absolutely.
exactly. I mean, it's as you know, the best thing in investing, no matter what style, is to keep buying consistently, keep averaging
That's
down.
it, bro. That's
Whether
what it
it's
comes
growth,
down to.
income, dividend growth doesn't matter. That's the general rule of thumb.
Hmm.
So yeah, and in Montreal, by the way, I mean, if people don't know, there's going to be a lot of ETF providers there. I mean, the guys at
Many of the
Hamilton are
ones we
going to be
talked
there,
about, yeah.
including their covered call manager. If you want to talk to them about the cover, and Hamilton's going to be there. Harvest is now
Nick, I
coming.
think his
They're
name's
another
Nick something. Yeah, Nick Picard, right?
Nick
Nick
Picard.
Picard is,
Yeah, Horizons is going to be there. BMO's
yeah.
represent BMO passive. I think did I
Harvest. I
forget
don't know. I don't
one?
know if you. I don't. I think you mentioned Harvest, but I was
Yeah,
talking, so
Hamilton
maybe you said Harvest.
Harvest, BMO, Horizons, Passive, which is
Yeah,
a portfolio management tool that I use. It's pretty cool. I like
yeah.
it. Um,
Some of our best partners and just amazing products, like across the board. And yeah, it's just gonna be so much opportunity to chat and ask them questions and learn about the products for themselves. So cool. So
yeah,
yeah, it's gonna be a blast. That's for sure.
I can't wait. It's gonna be fun, man.
That we can guarantee. Yeah, no doubt, man. And equally as excited to meet you. And hey, I appreciate you coming on the channel here again, bro.
Anytime,
We should do this
anytime.
more often. I mean, my viewers love it. They get the views. They want to see it, and they like clearly this whole field of investing is gaining popularity, and for good reason, right? I think
Yeah, your dad makes good
less,
videos on them. A little bit. Your
yeah.
dad's a little bit more. He's more technical than me. Like it's funny. I'm
Mm.
like the covered call guy now. I haven't
Yeah,
even.
absolutely.
I don't even have options enabled in my broker account. I kind of find that funny.
It
But
is kind of funny, but at the same time, what my dad always says is like, that's why you pay these MERs. That's why you pay the management fees, because they're doing all the work for you.
and they
It's
really
that's
are. I mean, covered
they
call
literally,
income, it really
bro,
is.
you
You
really
have
they got to be on
to,
top of their game. Yeah,
yeah, yeah, yeah.
something that
So
people
it'll be
can
cool
tool
to meet
around with,
all of
but
them. And yeah, if you have any questions about income or passive income, take them all down. We could do another session where I'll just answer
absolutely.
all the common questions because the questions are it's always the same ones coming up.
Yeah, I'm sure.
So I think Fiverr, if you come up with a list, I could come on and we could do a chat or we could do this again anytime you wish.
Absolutely. That even spurs a fun video idea. Maybe from this video down in the comment section below, if you guys are still sticking around, leave your top questions. And then imagine we just do a video answering the top 5 viewer questions
That would be
on, and
great.
like
I love
literally
doing
come
that.
in, we bang them out, because we can keep an eye out down in the comment section below. You guys can get your questions answered here from Adrian. And
Yeah, even a
yeah,
live
so I appreciate
stream,
your,
right?
bro, live stream would be a blast, man. Live streams, I love the live streams, honestly. They're a blast. And like
Yeah, they
that's
are. I
another
mean,
like, bro, yeah.
I did my first members only live stream like a few weeks ago, and I'm like, okay, I'm not gonna go over an hour. I went over an hour just answering
Yeah.
questions. It was it was getting dark in the video,
Yeah.
but it's fun to answer questions and make sure everyone is okay and
It's a different
understands
dynamic.
because
Yeah, it's so
it
personal.
yeah it's yeah exactly, and you see it live, right? It's completely different. It's like us now just having a conversation. It's a little bit more personal. So yeah,
Definitely more
man, looking
personalized,
forward
yeah.
to the event. Thanks for having me on. I come back on anytime you want, and we'll see each other soon, actually.
See you in less than a couple of weeks, buddy. But yeah, I appreciate you coming on. And yeah, drop a thumbs up, guys. Thanks, Adrian. Talk to you
Take care,
later.
Brandon.
See you, buddy.